The International Monetary Fund is forecasting global economic growth of 3.8% in 2015, up from an estimated 3.3% in 2014. This growth is expected to be led by the US, with growth in Europe and Japan likely to remain very disappointing. Economic growth in China is expected to slow to around 7% or perhaps a bit lower, from closer to 7.5% in 2014. But this will be a good outcome. The IMF is also expecting only a modest decline in inflation in 2015. But these forecasts were made before the recent sharp falls in the price of oil, which at around $55 per barrel is almost half its levels from mid-2014. This means that the shape of the world economy could be very different in 2015. Lower oil prices are a significant positive to oil importing countries that have a large consumer sector. This includes not only the US, Europe and Japan, but also countries like Australia. The lower oil price is bad news for energy exporting nations, such as those in the Middle East and Russia. The weak growth outlook in Europe and Japan is expected to see both central banks keep interest rates at zero and embark on more aggressive quantitative easing programs. China could also ease policy further to support growth. All this is likely to keep global bond yields relatively low, supporting other markets. The US dollar is expected to be the strongest of the major currencies this year, especially against the euro and the yen.